The New Zealand housing market is going out of control. House prices are booming over double digits and housing unaffordability is getting worse and worse. It's gotten so bad that the New Zealand Central Bank has had to put in new restrictions on property investors and on home buyers on their loan to value ratios to try and cool the housing market. If you thought the Australian housing bubble was bad, you haven't seen nothing yet. In this video, I'm going to be going over the crazy New Zealand housing market, and then I'm also going to apply that to the Australian housing market, because if you think that the Australian housing bubble couldn't get any worse, it definitely can. So sit back, relax, and let's get into it. And if this video brings you value, please tap that like and subscribe button for the holy YouTube algorithm. It really helps out the channel a lot. And comment your thoughts below. What do you think about the New Zealand housing market? And do you think we could see what's happening in New Zealand happen in Australia? Okay, so it says here, New Zealand Central Bank will reinstate mortgage lending restrictions next month, with further restrictions to come for property investors in a bid to curb the nation's surging house prices. Well, this is something I find very interesting. Now the central bank is stepping in to stop house prices going crazy, and I wonder if this is something the RBA will do in Australia to stop house prices from going up so much, because we know what they've been doing with dropping interest rates and quantitative easing. It's definitely been helping house prices, with quantitative easing dropping the rates on bonds so the government and banks can borrow cheaper, and the RBA dropping interest rates to 0.1% so they can borrow cheaper again. Because what you need to know, these markets aren't free markets. They definitely are manipulated. And what we've seen so far is they've manipulated to lift house prices, but if house prices get too out of control, they can manipulate it the other way. Like what we saw in Australia with APRA when they clamped down on property investors with interest-only loans in 2017. That helped cool down property prices for a little bit, and helped first home buyers get an edge over investors that were dominating the market around 2016, 2017. So the Reserve Bank of New Zealand will tighten loan-to-value restrictions on mortgage lending, with the tightest restrictions to be imposed on property investors who won't be able to borrow more than 60% of a property's value as of May 1. So this is going to be very interesting. Property investors are now going to have at least a 40% deposit. And here in Australia, I know some banks that will lend to investors with just a 10% deposit. So it will be interesting to see if we see these kind of restrictions imposed on investors here in Australia. What do you think? Economists have flagged the bank's decision might not have its desired impact on the housing market. Capital economists estimate that the new restrictions will reduce the volume of sales by no more than 10%, which would still be consistent with strong house price growth. So it's saying here it's only going to reduce demand by about 10%. I think it could possibly be more than 10%. And what it could do is it could affect confidence, and then it will be just a domino effect, and then less investors will want to get into the housing market. Nationally, CoreLogic data shows property values continue to grow over the month of January by 2.2%. Wow, it's a big increase, 2.2% just in 1 month, lifting 12 months house price growth by 12.8%. And if Australia keeps going with its current rate of house price growth, I could see us going over 10% here in Australia too in 2021. CoreLogic data shows Auckland's annual growth rate at 11%, its fastest pace since early 2017. While outside the main centres, the North Island's east coast town of Gisborne recorded 29.4% annual growth. That's crazy, 29.4% in a year. And I'm going to butcher this, Wanganui, I have no idea how to pronounce that, 25%. CoreLogic's house price index for January shows. So as we can see here on this chart, Auckland's medium house price now, according to this, is 1.16 million, so 1,164,000, and it's gone up 11%. Hamilton, 693,000, and it's gone up 12.6%. Wellington up 16%, the highest, to 878,000. Christchurch just up 9%, the weakest housing market, of 556,000. Investors are more prone to rapid fire sales. New Zealand housing lending restrictions were lifted in April last year, shortly after COVID hit. This resulted in housing markets' rapid acceleration, followed by a flurry of new medium house price records. So like it says here, in New Zealand they have pretty strict loan-to-value ratios, a lot more strict than here in Australia. And when the pandemic hit, they didn't want a property market downturn, so they loosened those restrictions. But what that really created was a massive housing boom, because all of a sudden, all these people that needed to save up a 20 to 40% deposit could, get a house with 5, 10, 20%. So under the RBNZ's lending changes, most owner-occupiers will require a 20% deposit, and from May 1, property investors will need a 40% deposit. The central bank said, "We are now concerned about the risk a sharp correction in the housing market poses for financial stability," Reserve Bank Deputy Governor Jeremy Baskin said in a statement on Tuesday. "There is evidence of speculative dynamic emerging with many buyers becoming highly leveraged." And hey, the exact same thing's happening here in Australia. The loan-to-value restrictions do not apply to new residential construction. So it seems like New Zealand is following the same route as Australia and trying to really build up the construction sector. And hey, it actually is good for housing affordability to increase supply, but as long as they don't, chuck in all these other incentives that jack up prices, like all these home builder grants and stuff like that, really what they should do is just let it be a free market and let the market figure out what prices should be. And I've been to New Zealand many times and I've looked at the houses. The houses in Auckland that I've seen in the area, the quality was a lot poorer than here in Australia. I think the rentals definitely wouldn't be up to grade for here in Victoria and here in Australia, and the cost of living is so much higher. The council rates I've seen there, they're over $2,000 per year, depending on the value of the property. Petrol's like $2.30 a litre. And let's have a look at the average salary in Auckland compared to Sydney. So according to payscale.com, the average salary in Auckland is $67,000, while the average salary in Sydney is $108,000. Now you may be thinking $108,000, that's not average. But again, this is just taking average. This could be as low as, $27,000, and this is taking in the averages of people earning $1 million. Housing unaffordability is so much worse in New Zealand with their wages compared to our wages. And I know many people that have come up to Australia from New Zealand, they love the wages here, even though, we've been complaining a lot. It definitely would be great to get wage growth here in Australia, but we do have some of the highest average and minimum wages in the world. Baskin added that highly leveraged property owners, and particularly property investors, are more prone to rapid fire sales that potentially amplify any downturn. And a risk that could be coming to highly leveraged property investors right now is rising interest rates. The rising interest rates in Australia are happening in the bond market, so that's signaling that there may be rate increases next year. And also, if we look at the New Zealand 10-year bond, it hit a low in September at 0.4%, but now it is all the way up to 1.9%. So that's a big increase of around 1.5% in the 10-year Treasury yield on the New Zealand government bonds. And so that's signaling that interest rates are probably going to go up. We'll have to continue to monitor this to see if they actually do increase. And that's something that's going to affect the stock market, and that's something that's going to affect the housing market, because as interest rates go down, people can borrow more, prices can go up. When interest rates go up, people can borrow less and prices go down. A growing number of highly indebted borrowers, especially investors, are now financially vulnerable to house price corrections and disruptions to their ability to service debt. And like I was saying, high interest rates will affect their serviceability. Australian New Zealand economist Ben Udy of Capital Economist says the impact of loan-to-value restrictions on the housing market has been mixed in the past. And this will just depend on how much cash investors have. If they're all cash, if they can go out and buy properties cash or buy properties with a 40-50% deposit, prices will keep going up. But if they're not that cashed up, they don't have the capital to go and put down a 40% deposit, then prices will correct. Says we estimate that the restrictions will reduce the volume of sales by no more than 10%, which will still be consistent with price growth. As such, we doubt the restrictions will be enough to cool the red-hot housing market. So this is going to be very interesting to see how it plays out if these new restrictions do actually affect the housing market, and if next year or late this year, the Reserve Bank of New Zealand is going to have to lift interest rates. So is a housing crisis coming? New Zealand home ownership rates are at their lowest levels since the 1950s, according to the 2018 census, falling to 64.5% of households. And this is what happens with low interest rates. Yes, it makes it easier to service the debt, but it makes it harder to get in the market. High interest rates actually help people get into the market sooner because, one, it lowers house prices, which means you need less of a deposit. And when you're saving for that deposit, if you're getting 7-8% interest on your savings, you're getting compound interest and you can grow your deposit much faster. For a lot of people, it's not really paying the monthly mortgage that's going to be tough for them. It's having to save up that huge deposit while renting. REI NZ Chief Executive Bindi Norman says Auckland City remains the most expensive district in the country, with the city reaching a new median record house price of 1.2 million in December 2020. And so you can bet it's even higher than that now. And like I was saying, the average salary is around 67,000. So that's nearly 20 times the average salary in Auckland just to buy a house. That's much worse than in Sydney of around 12 times the average income. Additionally, 11 regions and 27 districts also saw record high medium house prices at the end of last year. We have half the inventory levels we had back in December 2018. Therefore, there just isn't enough choice for people looking to purchase, which has meant there's been a significant pressure being placed on house prices in most part of the country, Norwell said. And that's right, that's a simple supply and demand. And the hard thing for Auckland is there's just not as much land as there is in, for example, Melbourne or Sydney to build out. So you're going to have that continued pressure unless they find some more ways to create more high density housing. Because when I did go to Auckland, I did see the blocks were a lot bigger than the typical blocks you'd see here in Melbourne or Sydney. When you add into the fact that there are record low interest rates, it means people are willing to compete to secure the property they want. They say this strength in the housing market is the one reason it expects the central bank to tighten monetary policy this year. So like I was saying earlier, bond markets have risen sharply over the last week as markets start to price in the chance that there are going to be interest rate hikes. But hey, who knows? The markets could have a big tantrum, the stock markets could sell off, the bond markets could sell off, and force the central banks to step in again. And given our expectation of higher bond yields in the US, we now expect the 10-year bonds in New Zealand to rise from 1.32% now to 2% by the end of 2022. And hey, like I was just showing you with those bond yields, it's pretty much at 2% now. By contrast, Australian yields may only edge up from 1.18% now to 1.5% by end of 2022. But the bond market is moving much faster than we think. As we can see here, the Australian 10-year Treasury bond is actually at 1.725%. So guys, it looks like maybe the housing boom in New Zealand could start to cool. Doesn't mean I'm saying there's going to be a crash or anything like that, but the boom that we've been seeing of double-digit house price growth, it could possibly cool. But again, nobody can predict the market. Well, other interventions could happen, like the central bank stepping back in again, but we are seeing lending restrictions imposed on investors and owner-occupiers. Simply supply and demand. There's going to be less buyers there, so that's going to put a weakening demand on house prices. And also we are seeing rising interest rates. And with low interest rates, we've seen house prices grow. But like I keep saying, with high interest rates, people aren't going to be able to borrow as much, and that's going to put downward pressure on house prices. I love New Zealand. It's a beautiful country, but definitely their housing market is out of control. The housing unaffordability and the cost of living is much higher in New Zealand than here in Australia. So a lot of people in Australia, and myself included, have thought, the housing bubble couldn't get any worse. But if we look at New Zealand, the housing bubble in Australia can definitely get a lot worse. And we're going to have to continue to monitor the market to see what happens in 2021. And for all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, like and subscribe. I'll keep you all up to date what's happening in the housing market, the economy, what's happening in the investing space. Comment your thoughts below. What do you think is going to happen to the New Zealand housing market in 2021? And of course, I'll see you all in the next video.